Yes. So the conventional wisdom with respect to the U.S. and China, if two elephants are fighting, is to stay out of the way. But I would buck that trend. I would say embrace the volatility. T. Rowe Price has been doing emerging markets for 40 years. I have seldom seen better opportunities in Asia credit in my career than the last year. And let's look past the headlines and focus on the returns. Despite everything that's happened in the last 12 months, our Asia credit strategy has returned 8%. That's outperformed the S&P. So I think if you look past the headlines, embrace the volatility, and look for where fundamentals have been oversold, you can be rewarded for being a contrarian in this environment.
Peter, do you think China is investable to that extent with that level of confidence? Or is it going to get hit harder by this trade war?
Look, I think China has problems that go well beyond trade and the trade war. It's clearly a headwind. But China is undergoing a transformation from an export-driven economy to a consumer-based economy. And as we've been seeing, it has not been easy. It's been doing it with fits and starts. It implements stimulative measures. It pulls back on them. The economy grows. The economy grows less quickly. It's obviously continuing to grow. It's a matter of the rate of growth. But even more recently, we saw massive aggregate financing activity in the beginning of the year. We saw a full 100 basis point cut to the RRR. And more recently, we saw a cut to the RRR to small businesses to 8%, which is a massive move. But money supply is not responding. GDP is not responding. And even the PMIs, which did go modestly into expansion again, really didn't react the way you would have thought given the massive amounts of stimulus. So China has problems well beyond trade, and it really is that shift that's going on from an export-based economy to a consumption-based economy.
Samy, in terms of emerging markets above and beyond China, what else do you like right now and why?
So other large overweights for me are South Africa and Brazil. Ironically, they actually have a lot in common. So you have political transition, you have 10 years of poor leadership, bad economic growth, balance of payments is starting to correct. But importantly, what we're seeing is prospects for reform, particularly in state-owned enterprises. You make the most money in my market when things are terrible and start getting better. And I think that's been the story the last 12 months in Brazil, and we're going to begin to see that in the next 12 months in South Africa. So two other markets that I'm overweight today.